It's Wednesday, October 15th, 2025. Welcome to your news update on Blip Brief, small but almost everything updated every weekday. All right, jumping straight in. The Indian markets, well, they logged their second straight day of marginal losses. It felt caught between some pretty decent corporate news and those, nagging global macro headwinds.
Yeah, exactly. The Nifty 50 ended down about 0.3%.
And the BSE Sensex dipped a bit more, maybe 0.4%.
Small moves, sure, but for a market that's been pretty resilient, it does signal maybe a bit of fear creeping in.
So what's behind that? You mentioned headwinds.
Well, it felt like classic risk-off sentiment. Two main things, really. Those lingering U.S.-China trade tensions, they always cast a shadow, don't they?
Always.
And importantly, we saw continued foreign institutional investor outflows, FIIs pulling back.
Even small outflows matter, right? It shows a lack of conviction.
Precisely. When that big long-term money steps back, even fractionally, it suggests doubt about the immediate path forward, regardless of how strong local fundamentals might look.
Okay, that definitely sets the scene for the strangest story of the day. Tata Motors.
Ah, yes.
If you just glanced at the headlines, you'd see the stock plunged over 40% on Tuesday.
40%. Yeah, that looks like a disaster on paper.
Right. Screams panic, value destruction. But that's really misleading here, isn't it?
Completely misleading. It's a textbook case of why you can't just react to the headline percentage change.
So what happened?
That huge drop was purely structural. It's the demerger. The shares started trading ex-commercial vehicle business.
Ah, the formal split into the passenger vehicle and CV units.
Exactly. So the market is just adjusting the share price to reflect the separated assets. It's purely mechanical.
Numeriga backed this up.
Right.
Said the underlying value is still there.
They did. Their assessment basically confirmed this massive percentage drop is just the math of the split. The true value is intact, just spread across the two new entities now.
Okay, so deep breaths, everyone. No panic needed on Tata Motors, just a structural adjustment.
Correct.
Outside that demerger drama, though, we did see some bright spots. Wipro and Tech Mahindra were top gainers.
Yep, both up around 1.3%. Good showing in IT.
On the other side, though, maybe some profit taking. Dr. Reddy's fell 2%.
And TCS, Tata Consultancy Services, also dipped about 1.6%.
Looking ahead to today's open, any positive signs?
Well, there are some slightly encouraging external cues. The Nikkei is up in Asia.
Okay.
And the GIF Nifty is trading in the green, so we might see a little opening bounce.
Might being the operative word.
Yeah.
Depends on those global trade tensions, the elephant in the room.
Always does. If they don't flare up overnight, maybe a slightly better start.
Okay. Now, speaking of resilience, you mentioned IT. Even if the overall market is nervous, the corporate report cards suggest the underlying engine is, well, still firing pretty strongly in places.
Definitely. We got a mixed bag from Indian IT earnings, but mostly positive signals, I'd say.
Yeah, it seemed like very different stories depending on the company.
Absolutely, and that's where it gets interesting looking at their strategies. Persistent Systems, for instance, had a, frankly, phenomenal quarter.
Phenomenal. How?
Their net profit just soared. 45% year-on-year jump.
Wow, 45%.
Yeah, and it wasn't a fluke. It was driven by really strong growth in their core areas, especially BFSI, that's banking, financial services, insurance.
One big growth there.
30% year-on-year in BFSI. And their high-tech segment also grew strongly, about 15.5% year-on-year. They're clearly landing some big transformation deals.
Okay, but then you look at Tech Mahindra, and the story was quite a bit softer. Net profit actually fell.
It did, down 4.5% year-on-year.
Why the drop there?
The main drag seemed to be higher staff costs. Sounds like they're grappling with wage inflation, maybe retention challenges.
But wasn't there some sequential improvement? Quarter on quarter.
There was, yeah. Profit grew 4.7% from the previous quarter, so that suggests maybe some internal efforts to stabilize things are starting to work.
Okay, so persistent soaring, Tech Mahindra stabilizing after a dip, and then TCS, which saw its stock slip a bit yesterday.
Yeah.
What's the bigger picture there, especially around AI?
Right. The contrast between them highlights the central challenge for the whole IT sector right now, adapting to AI.
And TCS has a specific plan.
A massive one. They're planning to reskill, get this, 100,000 staff annually.
100,000 a year. That's huge.
It's a colossal investment. It signals they're prioritizing transforming their existing workforce internally rather than just hiring externally for AI skills.
So training their own people.
Exactly. It's probably slower, maybe riskier in the short term, but potentially a much stronger long-term play. Locks in talent, institutional knowledge.
They're betting AI changes everything, basically.
That seems to be the bet. They're moving proactively to adapt their massive workforce, which, helps explain why there might be some immediate pressure on their stock price. It's an investment.
Makes sense. A long-term investment hurting today's optics slightly. Okay, let's shift to financials. Here, the story seems much clearer. Mostly strength and capital deployment.
Definitely. ICICI Prudential Life, for example, saw its consolidated net profit jump 19% year-on-year, strong growth.
And they're raising money, too.
They are. Planning to raise 1,200 crore rupees via subordinated debt.
Subordinated debt. Remind us what that means for the listener.
Sure. It's basically borrowing money that ranks below other debts if the company ever faced insolvency. So lenders take on more risk.
Which means the company has to offer a higher interest rate.
Typically, yes, but issuing it signals really high confidence from the company about its future solvency and profits. It's a way to fuel growth without diluting equity. A powerful move.
Got it. And their counterpart, ICICI Lombard, the general insurance arm.
Also a strong quarter, net profit up 18%. Interestingly, that was despite their gross direct premium income, the GDPI, dipping slightly by 1.9% year-on-year.
Okay, and rounding out financials, Bank of Maharashtra.
Solid numbers there, too. Booked a 23% rise in net profit for Q2. Shows broad resilience across banking.
Good stuff. Now, we can't leave the domestic markets without touching on IPOs. That buzz seems to be back.
Oh, absolutely. The appetite for new listings is definitely there.
Case in point, LG Electronics India. What a debut, listed at a 50% premium.
50%, yeah, that's huge. Shows real market excitement, recognition of that brand value, serious confidence.
Tata Capital's listing was more muted, but still positive.
Right. A modest but respectable 1.23% premium. Still in the green.
And the Canara HSBC life insurance IPO.
That just closed, and it was subscribed 2.29 times over.
So the takeaway is clear then.
I think so. Even with those FII outflows and the global jitters we talked about, domestic investors, both retail and institutional, are still very keen on new quality listings, especially from big, recognizable brands. That points to some real underlying structural strength domestically.
Okay, good point. Let's zoom out now to the broader economy and the global macro picture, which seems to be the source of all that market anxiety.
Right, the bigger stage.
And we start with some good news for India, a big vote of confidence from the IMF.
Yes, absolutely. The International Monetary Fund bumped up India's GDP growth forecast for fiscal year 2026.
Raised it. By how much?
Up to 6.6%. That's up from their previous estimate of 6.4%.
And what was their reasoning?
Pretty straightforward. They cited India's really strong performance in the first quarter, saying it largely offset the initial negative hit from those higher U.S. tariffs on Indian goods.
So, domestic strength winning out.
Seems like it. The IMF chief specifically called India a key engine of global growth. It really confirms that narrative we've been hearing that strong domestic demand is managing to decouple somewhat from global slowdown fears.
Okay, that's encouraging. And compounding that optimism, truly fantastic news on inflation here in India.
Yeah, this was significant. Wholesale inflation, the WPI, dropped sharply, just 0.13% in September.
Down from what in August?
It was 0.52% in August, so a big deceleration.
And retail inflation?
Even more dramatic, really. It cooled to an 8-year low. Just 1.54%.
An 8-year low. Wow, what drove that?
Mostly a significant fall in food prices. That's obviously critical for household budgets and overall sentiment.
So the immediate implication, does this mean the RBI, the Reserve Bank of India, might cut rates?
Well, it certainly shortens the odds. This steep plunge in both wholesale and retail inflation gives them much more room to maneuver, potentially easing policy rates further.
But hang on, the IMF just mentioned U.S. tariffs as an issue, and those U.S.-China tensions are still high. Would the RBI really ease policy with those global risks looming?
That's the key question, isn't it? It's a balancing act.
So caution might win out despite the great inflation data.
I think that's likely, at least for now. While the data is great, the RBI is fundamentally cautious. They'll want to be sure this low inflation trend is, sticky, not just a one-month blip from food prices.
So hold fire for now, watch the global situation, but the door is more open for cuts later.
Exactly. The probability of easing in the near future has definitely increased significantly.
Okay. Now here's the counter trend. Despite all that positive inflation news, the rupee actually weakened.
It did, yeah. Fell 13 pays against the US dollar, hitting an all-time low.
Why? With good inflation news, shouldn't it strengthen?
This is where global macro really slams into domestic pressure. The rupee got hit by two things.
Okay.
One, the local drag from those negative domestic equities, we discussed the FEI outflows.
Right.
And two, a stronger US dollar globally. Now, usually a weaker dollar helps the rupee, and the dollar did soften a bit on Fed signals, which we'll get to.
But the domestic weakness was stronger.
Exactly. The local pressure from equity outflows was so significant, it overwhelmed any potential global relief for the rupee, pushing it to that all-time low. It really tells you how much pressure local assets felt yesterday.
Okay, that makes sense. And that weakness mirrored in commodities, too. Oil prices fell.
They did, down by more than 2%, a noticeable drop.
What drove that pullback in oil?
Two big factors came together. First, the International Energy Agency, the IEA, put out this stark warning about a massive potential supply glut coming down the line.
How big a glut?
Huge. They're talking about a potential surplus of 4 million barrels per day forecast for 2026.
4 million barrels a day. That's enormous.
It is. That kind of forecast really hits long-term price expectations hard. And second, adding to that pressure, were those persistent U.S.-China trade tensions.
Slowing down demand expectations.
Precisely. Especially from China, the world's biggest oil importer. Fears of slower global manufacturing means, well, less expected need for crude oil. Supply up, demand down, prices fall.
Right. Which brings us neatly to geopolitics, where those U.S.-China tensions were definitely front and center yesterday.
They were. China actually escalated things a bit, didn't they?
Yeah, they sanctioned 5 subsidiaries of a U.S. shipbuilding unit, Hanwha Ocean.
And this isn't just, another tariff. This targets strategic capabilities, military, industrial,
Pointed.
very specific sanctions aimed at naval and industrial components. It feels like an escalation of the trade war into more sensitive, sector-specific conflict.
And adding to China's woes, their own domestic picture isn't great. Consumer prices fell again.
Yeah, down 0.3% in September. That marks continued deflation, suggesting internal demand there is still really struggling.
Okay, shifting focus. Some potentially positive news for global markets came from the U.S. Fed Chair, Jerome Powell.
Yes, he signaled that there might be further room for the Fed to lower borrowing costs this year.
Aiming to support the labor market.
That seemed to be the rationale. It's a pretty strong signal towards global easing.
And what does that usually mean for markets?
Well, generally, when the Fed hints at rate cuts, it tends to put downward pressure on the U.S. dollar.
Which should help currencies like the rupee.
It should offer some relief, yes, even though, as we saw yesterday, the rupee's domestic weakness kind of overwhelmed that global trend for the day.
Okay. Now, let's shift back to India's internal security situation. Home Minister Amit Shah made some strong statements.
Very firm warning, yes. He said security forces would punish terrorists even if you are hiding in hell.
Strong words. Any specific context?
It's understood he was referencing ongoing major internal security drives Operation Sindoor and Operation Mahadev, so highlighting a very aggressive stance against terrorism, both cross-border and domestic, a clear political commitment.
Right. And then on a completely different and quite sensitive note, this story about an Indian-origin U.S. policy expert.
Yes, Ashley, tell us. Arrested for allegedly hoarding classified documents.
And having secret links with Chinese officials.
That's the allegation. It's an explosive story. Immediately raises huge questions about the integrity of high-level policy advice in D.C., trust levels.
Especially concerning experts with deep regional ties.
Exactly. It touches a very sensitive nerve in the U.S.-India strategic relationship right now.
And just one more note on the U.S. stricter visa interview rules announced.
Yes, for all immigrant and non-immigrant applicants, that potentially affects thousands of Indian professional students, basically tightening the gate for movement and skills transfer into the U.S.
Okay, lots happening on the geopolitical front. Let's end, though, with our innovation shot. And this one sounds like something straight out of science fiction finally becoming real.
It really does. Artificial neurons, powered by bacteria.
Bacteria? Tell me more.
This is some truly phenomenal work from engineers at UMass Amherst. They actually built an artificial neuron.
Okay.
But instead of using silicon like traditional chips, they've used bacterial protein nanowires. And the key thing is, it functions just like a real biological neuron.
Wow. Okay, why use bacterial protein? What's the big deal there? What's the breakthrough?
It really comes down to two massive challenges in biointegrated computing: efficiency and biological compatibility.
Right, getting electronics to work well with biology.
Exactly. This bacterial protein neuron operates at an incredibly low voltage, much, much lower than traditional electronic components,
And why does low voltage matter so much?
because it allows for seamless communication with actual living biological cells, like the neurons in your brain, using very little power.
So a huge improvement in energy efficiency. That's critical if you're thinking about implants or wearables.
Absolutely critical. This drastically improves how long devices could last, how small they could be. It basically paves the way for revolutionary advances.
Like what kinds of advances?
Think next-generation medical tech, truly integrated biocomputing, much more sophisticated brain-computer interfaces, maybe advanced prosthetics that feel more natural.
It sounds like it removes a fundamental energy barrier.
That's a great way to put it. It removes the energy barrier that has long made it difficult for electronics to truly and efficiently integrate with biological systems. It could genuinely transform how we think about that interface between technology and life itself. Really groundbreaking stuff.
Incredible. A fascinating way to end our update. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.